welcome back to the RationalInvestor.com Broiler Chicken Show. Trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everybody. Welcome back to the RationalInvestor.com's Broiler Chicken Show. Buck. Got the video conferencing software Zoom running. Chris likes to use for this, so I am monitoring that and letting people in here that have knocking on the door. So my apologies. Looking over there. Where's the camera? Hello. There we are there. Hello, Goose88. Hello, Archery Connection. Don't know how many people are actually watching the video today. It is pretty close to the Christmas holiday. So yeah, I can understand probably a lot of people in the market are kind of checking out now. Yeah, you know, Brian, I will do this video and then head off and spend the afternoon with Liam and see if I can somehow make his day nice and bright and sunny. So I suppose you can maybe say a prayer right now, save us a job at the end of the video, but I think we'll probably, it looks like it's, I guess, about 10:40 here on the wet coast, and I'll look to take off for Lily around noon. So that gives us about an hour and 20 minutes or so to chat with you good people, and hopefully I can somehow make a positive difference in all of your lives. And of course, if you're watching this video after the fact, maybe you're new to the channel, welcome. Hit the like button, subscribe, ring Colleen's bell, as we used to say, although I don't know where Colleen is in this world. I hope she's doing okay. It's going to be a bit of a challenging world going forward here for the next little while. But hopefully we're in a relatively friendly part of the market cycle. So should be able to make a couple shekels here. I'll tell you, hats off to anybody who, came to either the site or even investing in 2021 in that kind of nutso last crypto cycle. And you were able to survive till today. You have officially survived through the worst part of the cycle. Now it's time to enjoy the good part of the cycle. And I would also say too, there's some general benchmarks aside from the crypto cycle that we should keep in mind. Actually had an interesting on the site. We have a fairly active community and a bunch of people on the site interested in Larry. I think I introduced Larry a while ago too. TRI community. He's getting up there in age, but I used to follow Larry G's back in the 80s and 90s. So it was interesting listening to Larry's forecast. I think on balance, it basically is the same thing that you hear the Beamish talk about, things like decennial year cycles and where are we in the inflation cycle and all that kind of fun stuff. Little bit concerning that they've run the market up as strongly as they have into the end of the year here. I suppose to that end, interesting. Larry put on a few sort of forecasts in his video of what to expect, and I just shared these with the community. I do kind of like the idea that we probably do need some sort of pullback here the beginning of 2025, just to sort of clean up a lot of the excesses. And I mean, let's call a spade a spade. Stock market, Bitcoin, a lot of cryptos in general have moved up quite a bit over the course of 2024. So would it be realistic for people to consider about maybe taking some profits? actually ringing the register? I think so. So seeing the volatility in the market right now, not really too surprising. Where is our stock market? I think this is my stock market screen. Let's take a quick boo at yield stocks. Just give me an idea of where the heck we've come. Come a long way, baby. If we look at just the ES, it kind of feels like too, maybe we're coming to a bit of a harmonic objective here as well. I suppose we can get rid of some of this stuff here. Probably haven't updated this chart in a while. Something like that. Anyway, I mean, this is just off of a clothesline basis on the weekly, so it's not completely accurate, but yeah, I think you get the idea. I don't know whether we actually have to hit this upside objective. Oh, well, we have to. I think we have. Probably to help you understand what's happened here a little bit better, we should probably throw on our bot levels. What do you think the odds are that the 25 level comes right in off of that market structure bottom in the Wyckoff check level? I'd be willing to bet dollars to donuts. Let's see. Survey says, and it's always backwards. Why is it always backwards? Where are we here? Reverse. There we go. Yeah, look at that. Eh? It's so cliche. That's why I love this setup so much. It's remarkable how the market almost like always sets these levels up. So coming out of the sickness, interesting. Remember, ironically enough, following the sickness, I remember Jerry here, through this part of this cycle, he was just like, all I just want the stock market to come back to where it was before the sickness. Well, he got his wish, and then Biden went and just jammed through, along with all the other fucking socialists around the world. And of course, this plays perfectly into the Rothschilds' plan to hyperinflate the money supply. Great reset and Klaus and all that bullshit. $100 trillion in lending. Like, fuck you. Jesus. Can anybody even like imagine what $100 trillion actually even looks like? Anyway. So unfortunately we went through the hyperinflationary push 2021 into 2022, then the silly Fed, and keep in mind I think this was all 100% intentional, but the silly Fed goes, oh gee whiz, you're spending a lot of money, government, maybe that's going to lead to inflation. And of course, remember we talked lots, Druckenmiller barking about 20% annual retail sales rate, which is, hyperinflationary into itself. The consumer's given money. And then, all the sort of, well, you don't have to pay rent. You don't have to pay your mortgage. Well, what's a consumer going to do? Fucking A, man, let's go spend some money. I mean, you know how the story went. Anyway, hyperinflation, got to crank interest rates up, which basically caused that sort of 22, 23 kind of pause. And then coming up the other side, interesting A, B, C, D, body bots, and if anything, ironically enough, this is pretty cliche. At any given point in time, you should expect the market to retrace 33 to 50%. So not a big surprise. Straight up, right back down into Colin and his pump chaser zone. And we start consolidating. You can see inverted head and shoulders, all that kind of fun stuff. Nice breakout, Wyckoff check of the breakout. And ironically enough, if we did a fib off of this range alone, what do you think the odds are? That's 33 to 50% kind of idea. And then we turned up and boom, had you gone long off of the bot level, move your stop to scratch, never did come back. So it's still long. Then move your stop to trailing. As soon as we start seeing M's come in the market, maybe we start hopping off, or, you can move your stop up, use the 3 high-low method I teach in the level 3 program. 1 low, 2 lows, 3 lows. All right, maybe I'll move my stop off of scratch at this point here. break to new highs, one lows, two lows, three lows. Maybe I move my stop here, makes new high, one lows, two lows, three lows, move my stop to there, and oh, we hit the bot objective. Ding, 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 ding. You should have your sort of take profit order working there, and ring in the register. And really, you don't even care what happens now. You just made your money. The setup's done. I suppose for those people that are like, well, I've got ice in my blood, and it's not really that big of a risk. Maybe take some profits there, and if this thing does turn into some alt ABCD, you can always have an open order working at these levels up top. But I would say, to all intents and purposes, this market's ready for some sort of consolidation now. I don't know exactly where it's going to come in. It's not our job to predict exactly where it's going to come in. We just need to understand what the chalk marks are. And I did find it interesting listening. If I'm going to listen to anybody predict the market, it'll be people like Larry Williams, who are much, much smarter than clowns like me. And a lot of his forecasts, he's kind of looking for some sort of cycle pivot around February, March time period. And actually, this is pretty normal. This is I think is just general forecast. It's a public video, so I don't think we have to be too concerned about Mr. Williams getting upset at us for sharing this information. What's really interesting, probably more for this community, is when we head on over and look at things like your Bitcoin and what it's likely to do. And the same sort of thing. Larry's looking for some sort of pullback here. And really, I don't think that he's expecting. And actually, interesting, his little forecast completely missed that big market run up there that we just had. But, it's here nor there. But I think that he's looking for sort of the big seasonal push rally to actually begin right around that June period. You've often hear me say, sell in May and walk away kind of idea. And usually into that June, July period, that's where we have the big seasonal pivot. And he's looking for Bitcoin to take off here into the end of the year. Which aligns with our seasonal peak expectations. I get the impression from Larry that what he's really thinking is we're going to go into a bit of a trading range here. Obviously, we've moved up dramatically. Probably have to give a bit of this back, and we're just going to chop sideways here as we sort of clean up the market state here heading into the spring. Is this okay? You buy this date. Is this you sell this date? Not really. This is just sort of like a general framework. I do like the idea that, because we had such a move up here on, the whole market, really. I think I banged out maybe I don't know, there's about 10, 20 doubles there just over that period. I mean, a hell of a lot of profits. And some of our shit coins did go absolutely parabolic. There was one size, I think we got off, at least I got off 6 or 7 doubles, which means the asset went up a lot. To every single time the asset doubles, out goes another half. You can imagine what 6 doubles does to the price of an asset. And I see a lot of those names are just slowly working their way back down to earth. I mean, I don't know whether I want to follow this roadmap in particular. I think what this is basically suggesting, as you can see, there's February. Here is into the end of the year, beginning of the new year kind of idea. Yeah. I wanted to reference Larry because I think he's very, very good at what he does, and it's probably not bad sort of food for thought for us to think about. There are a couple interesting points going on here in the market. Me personally, I think what happened there was obviously we had a huge sort of unknown. Was the United States of America, which to all intents and purposes is sort of like the world economic leader right now. They call it the world economic engine. Was it really going to head down like a uber socialist path? Were the Rothschilds completely in control? And were we going to be nothing more than just drones for their sort of, 80-year money cycle pivots? In a weird sort of way, I think that on balance, of course, the stock market itself is a reflection of society and society's sort of attitude. I get the impression that what happened following that election was kind of a huge collective sigh of relief. Oh, thank God. The because when Joe Sixpack is just sitting there, just minding their own business, they're kind of at the mercy of these huge oligarchical sort of you know forces. There's not really much Joe Sixpack can do, and every once in a while we get these little windows where Joe Sixpack can stand up and say, "Hey, hey, 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 wait a minute, wait a minute, wait a minute." And I do think that that's exactly what just happened in the United States of America. And it's fascinating to watch sort of the reverberations of this event, I think collectively right around the globe. Whether you see what's happening in France right now. Do we dare mention China enough? Fucking what a shit show this place is. But I think the humans just went, "Whoa, slow down, Klaus! Like, what the fuck are you doing to us?" And this stupid Trudeau doofus. He is the personification of Klaus. And I think Klaus, they got a little arrogant. They got a little full of themselves. And I think they're getting bitch slapped right now by anybody in the public, just telling Klaus to go fuck themselves and get the fuck out of our lives. Excuse my French. Having said that, it is what it is. Let's not go down the negativity road. If anything, I actually think that this is a positive. Having said that, is it possible that markets can move a little too far, a little too fast? And I think that's exactly what happened in this market. Everything went just like straight up following that election. And, if we look at our breadth indicators, as I said, that collective sigh of relief around the world, everything just went straight up. That was sort of not part of the 1% conspiracy plan, if you will. So in that sort of vacuum of kind of like, what do I want to show you? Do I want to show you the website? No. This is more Larry stuff. What I want to show you is, over here. So coming out of that November event, the whole market just lifted. And interestingly enough, we all know, or we're familiar with the fact that basically Allen bought his way into the White House. Now, officially, the White House is in love with crypto. I would imagine Donnie was pretty friendly to crypto anyway, but just not publicly so. Previous election, remember at the very end of his last term, he was shilling millennia NFTs. So I think, Donnie's the type of guy, he's a capitalist. If he can make money off of something, then what the hell, he'll go for it. At the same time, too, though, capitalism has absolutely no ethics, no morals whatsoever. And don't kid yourself. I mean, that's half of the reason why I do what I do here. Right? I'm trying to sort of offset how nasty and evil capitalism can be, and just sort of warning all of you, don't listen to these people and just believe them blindly. They might actually be lying to your face to get your money. Remember and sadly, if you play connect the dots with the banksters, and then, even if you go and look at human history, this goes all the way back thousands of years, where sadly, there's a fine line between doing the right thing and doing the capitalist thing. It gets very gray in certain areas. And ethically, capitalists aren't known for ethics. So my job here is to try and help all of you. All right, just remind you, don't get sucked into the euphoria. Ironically enough, when stuff is usually a good buy, it's when nobody else is interested. And then, of course, we teach you, what are some of the price action tells that, maybe this asset actually should be bought. And maybe, even though the public's super uber interested, maybe this isn't the best time for you to be going and spending your hard-earned money. That's my job. It's to just try and impart to all of you the little tells that I've learned over the past 30, 40 years playing this game, how to keep yourself out of trouble. Hopefully I do a half decent job at this. And as I've said, I even put out a tweet recently along these lines. I could actually show you an image 10 years ago in the crypto space that is exactly identical to this image. Identical. And, I even blocked out the name of this asset because, frankly speaking, the name of the asset is actually kind of irrelevant, which is kind of a sad commentary on this game. This is really more a reflection of human behavior and human psychology than anything else. And I even, before I got the video going today, I even posted this was a trade that I basically did a week or two that is basically exactly the same image. Identical. Although this one, I did get filled on. This one, wherever it is, I haven't been filled on. The order is working. If I get filled, great. If I don't, no big deal. And right now we're going through the process of loading up our car carrier. How many cars can you get on the car carrier as we head into our cycle apex that we're expecting next fall? And Larry's expecting the same thing too. Now you could just buy one asset here and just hold on to it and sell it into the coming cycle peak. I think on balance, I think we've got that pretty tapped. I mean, God, I've been talking to you guys forever about these images, so none of this should be new to any of you. But you've seen this a gazillion times. And then also, if we look at the long-term cycles image, you've seen this a gazillion times. There's really nothing new going on here whatsoever. Although I thought my boxes were a little bit bigger than this, but anyway. Fall, winter, spring, summer. Oh, fall, winter, spring, summer. Hey, we're in summer right now. Fucking A. So, make hay while the sun shines. This is your window, folks. I don't necessarily think that our cycle is going to look like this go around. I actually think that this cycle is going to look more like this. And you can even see I've got my little, we were there then, but you notice the breakout through the old time highs, and then notice the noticeable consolidation all around here. And if we do like a little date bar from that happening event, this was 28 weeks following that. So if we fast forward to today, let's see where we are now. We are 35 in. So remember 28 was that previous one. So the start of that consolidation window was there. The end of October, beginning of November, right? And then so that's basically that right there, right? 28 bars following the halvening. We're through there. And now we've punched our way to new highs. And now I think we're sort of sitting right here. Not really shocking. So let's maybe we had 1 day of pullback, so that's what does that say? 35 bars, right? Let's see, are we anywhere near that 35 bars since the halving? There is the happening there, 36 bars. Oh, that's pretty close. So, and you can see we're starting that correction process. There was the breakout through the old highs. And you can kind of see that, we flirted with the old highs for a bit, then broke out. And now we're just doing a little bit of consolidating following that breakout phase. Let's go back there again. That was here. So the breakout to new all highs. Now, I guess the question ultimately is, 35 bars in. If we go 35 bars, where's 35? Well, I guess that's right there. So is that action right there? Is that what we're doing right now? I don't know. And really, it's not my job to predict that this is exactly where we are. Well, my job is to look at this and go, holy sheep shit, look what's coming in front of us. This is what I think you need to respect. And any pullbacks here, while we're in this summer window, any pullbacks here in size are buying opportunities, right? And it looks like we'll get 1, 2, 3 pullbacks, and maybe even a fourth just before the final blow off top as we head into next October. But any of these pullback windows, and especially with the little shit coins, right? These little pullbacks, you will have the shit coins actually drop right back down against the bottom end of their ranges. And that, of course, brings us back to this conversation and this kind of price action. Seeing this happening here right now, it's actually business as usual. This is so cliche, it's ridiculous. And then, as I said, this is one that I tweeted out. This is an order because I made this publicly. Now, I don't think anybody knows what specific asset this is. Often when I actually post these and I put the name on it, whoever's running this thing will see my post and go, well, there's no fucking way we're going to take the price down there because we know this guy's got a whole bunch of buy orders. So no, we're not going to take it there. We'll bottom it here and then we'll take it up because we got to force this guy to come in and market buy. Now that we know that he wants to buy here, there's no way we're going to give that to him. And then, of course, they all say, and of course, this guy's got like 17,000 followers on social media or whatever the hell the number is. And so are there any of his minions that are going to also have their buy orders? And they could probably look at the order book and go, yeah, look at all these fucking retail orders sitting down here. There's no way we're going to let them have cheap coins like that. So sometimes it doesn't help me when I do these kind of tweets out here. But, as an example, and I didn't talk about this one publicly, my bigger poop coin portfolio. I've got like a big poop coin portfolio and a little poop coin portfolio. And the point is that I wanted to demonstrate to all of you, you can do this on a larger size account. In fact, we have at TRI, we have 3 different accounts running right now. And then Julian has his account. Of course, Julian does a very different methodologies. So I won't speak to Julian's performance or whatever assets he's trading. But for the purposes of the site, the way that I had envisioned this all along here, of course, I got to find the right screen. Where is the actual website? It's around here somewhere. So this one. Hey, there we go. Got the and I don't know whether I really like the naming of this. But anyway, TRI's big investment portfolio, we call it the Crypto FA portfolio. And this portfolio for us, big, is like hundreds of thousands of dollars. So we don't necessarily, Sjord actually doesn't even really like to advertise the amount of money he has working in these assets, although I suppose that would be kind of cool if current value of our portfolio, that's I thought that was 7.6 million. That would have been funny. Not quite sure why he has 3 decimal points here. But anyway, these investment sizes, it's interesting. They're kind of big enough that I don't think Sjord really likes to advertise. the size of these. But anyway, this is our big fundamental investment portfolio, hundreds of thousands of dollars. And I fully expect into next October, this kind of portfolio probably well over $1 million. If we're lucky, even a couple million. There are some names in here that I think are going to do really, really well. Actually, interesting. I just saw in here, there's one name that I'm invested in. I know TRI is invested in, but I don't even see it listed on here. So, but I think it was a funding, so maybe a little bit different. The symbol wouldn't be on here just as of yet. Anyway, so this is the big portfolio. And unfortunately, we've asked Jord, but he feels very, very uncomfortable about actually putting the dollar figures. But think of this as our big, blue chip, leaning on Sjord himself for his sort of digital expertise. One of the names that we've put a lot of money into. And actually, I think his favorite coin this cycle, I think his Ruin and Thornchain. I can't speak Thorchain. I can't speak specifically about that, but that's my hunch. And then we also have some flyers in here like this hello. I think that little hello into some sort of orgy cycle peak could easily be 100x. I'm not telling you to buy it. Frankly speaking, I don't care whether you buy it. We're long. So I wanted to go 100x so we can go buy our islands down in the Caribbean and stuff. So anyway, he has done a number of different video tutorials. Sjord, of course, has been absolutely overwhelmed with site development of late, so we haven't stressed him out too much, but we're so fucking close bringing this screener and notification system online. And as soon as this is all ready to go, I'll start doing video tutorials and stuff for the site. And I am very pleased to see the progress, but unfortunately, Sjord is so overwhelmed with this. I just want him to get it done, and then we'll probably circle back around. And once that big job is finished, and he's like, "Fine, it's done. Get out of my face." Then maybe, if we're lucky, we'll go back to our old format of having Sjord on weekly calls and stuff like that to tell you a little bit about his investment, like serious large size investments. Then the next portfolio that I'm managing and running, and these are two of them. Last cycle, I did one of these sort of demonstrations, and this is the whole Twitter feed up at the top. I just have this pinned to my top. When I first got involved in the crypto space, basically it was a bet. Keep in mind, this was entirely venture capital. Nobody knew what the hell this was going to have, what was going to come of all this. In fact, I even remember being in the trading view community when Bitcoin went from $1,100 all the way back down to $150, and there were some people absolutely freaking out that was the end. Oh, it's all going to zero. So you just don't know. But when we first started up this venture in 2014, I just simply said, look, I'll take $500. What's $500? In fact, it was we were just starting up the school program because there's a bunch of people onto TradingView that were like, "Hey, we're computer programmers, but we don't know what we're doing trading. So can you just give us a general idea of what we're supposed to be doing?" So I threw the basic school program together, build a trading plan, right? Follow your plan, trade setups, blah blah blah, risk management. And I took one student's tuition, $500, and I said, I will ramp this up to $100,000 for a demonstration for you. And everybody's like, "Oh no, there's no way you can do that. Yeah, you're crazy, right?" Well, and I did it. Portfolio actually went up quite a bit more than that, but that's here nor there. I said, and that's the type of person that I am. You can only gauge how good of a trader you are by how good you actually are at doing what you said you were going to do. And this is like coming from a professional educator. I don't know how the fuck I turned into a professional educator, but I've been teaching these, all of you, for like 10 years now, a full decade. And what I watch repeatedly, and it's also the same for myself, is you are only as good of a trader as you are of doing what you say you're going to do. Most people in this world, they cannot do what they said they were going to do. I mean, if you want a nice little tip from a guy who's been in this business forever, the number one thing that will get you on a good course is before you spend any money, you articulate exactly what are the reasons that will get you to spend your hard earned money. And then what are the reasons around you either taking profits or you saying, look at this idea was wrong. I better go into capital preservation mode and start obeying risk management rules. All of that needs to be completely articulated before you ever spend a penny. I don't know whether you people listen to me. I've said exactly the same damn thing for 10 years straight. Even had a guy that I thought was making very good progress. He was working away through the education program. Happened to show him a study that said that particular markets seasonally should come into a bottoming window. And that was the entire reason that he decided to take the trade. Well, this market seasonally is supposed to bottom on this specific date, so I went and bought it. And I said, okay, well, are you trading any setups? No. What are you risking? I don't know. I'm just throwing on a futures contract. We'll see what the hell happens. Then, of course, things like Fed announcement happens. I personally think all around that Fed event, I think actually it had less to do with the Fed and more to do with the options expiry that happened on Friday. Huge options expiry, triple witching futures, options on futures, index options, indexes, stocks, a whole bunch of options all expired here. And ironic enough, the Fed announcement was on Wednesday. The whole market shit its pants following the Fed. But I don't think it had anything to do with the Fed. I think it had everything to do with the fact that we had this massive options expire. I think it was like one of the biggest notional value options expiries ever, like to the tune of like trillions of dollars. And clearly, and what I often teach people is that the day of options expiry is not the day that they do the business. They actually do the business typically the day before options expiry, the Thursday. But I actually think that they waited for the Fed to actually do its thing. Now, if the Fed had come out and said, you know what? Fuck it. We're going to take interest rates to zero because we all love you so much. Well, in that kind of environment, the stock market would have just gone fucking crazy. But since what happened on Wednesday wasn't a surprise to anybody, they had basically been telegraphing that they were going to cut rates. And then in the wording, and frankly speaking, I look at the data, I can't actually justify seeing aggressive interest rate cuts here because I think inflation is still a major problem. In fact, I don't even think that the economies of the world are growing at all right now. And the only growth that you're seeing is inflation. Well, what kind of growth is that? That's not real growth. That's just prices moving up at the grocery store. Oh, look, the economy is getting greater because they just raised the price of bread another 20%. Oh, we're all doing great. How does that work? This is the banksters fucking us over, by the way. Welcome to your new reality. Great reset. $100 trillion in lending for this EV revolution. What a joke. But anyway, it is the reality that we live in. So the point I'm trying to make here was I was very disappointed in this person. Very first thing that I said to him was, why aren't you trading setups? What was the point that justified you getting long? Right. And all of you on social media should, I mean, the interesting thing is the people that actually watch this video live with me, you guys know exactly how this goes. How many reasons are we supposed to have to justify taking a trade? And yes, those should be technical, not, just because of the seasonal window. You can always add seasonality into it. That can validate the idea. But at the same time, too, every single week I go, there you go. Glass Insight's already answering the damn question. How about you people over on YouTube? Let's see how many of the 53 of you watching know how this goes. And I say this every single week. Is somebody going to be able to jump through the herd? I know Adam, he knows this backwards. How many reasons? I don't know. Somebody help me here. I'll give everybody on YouTube the opportunity to catch up here. I think it's a little bit delayed. What time is it? Remember, I have to be, oh shit, I haven't got much time here. Okay, well, anyway, that's the public service teaching part of the conversation today. I hope you enjoyed that. There you are. Adam says 3. Somebody finally placates me. There you go. Hello, Vaughn. And okay, and what now? Here they come. Excellent. Good job, everybody. Perfect. What's reason number 1? Quick, because we got to move on. So if you, as soon as you guys hear this, post your answers, because I number 1, I'm supposed to be making a positive difference in this world, teaching you best practices. Nothing ever changes with anything we ever teach. So let's just, this is our public service part of the call here this week. Let's just reaffirm for anybody who's watching this, how many reasons are we justified taking a trade technically? Answer is 3. How does the cadence go? Reason number 1 should always be what? Excellent. Ella Vorn. Ella Vorn. That's an interesting name. D-Mac, of course. Adam, of course. Cole being a smart ass. Hey, the more things change, the more they stay exactly the same. Thank you, Glass Insights. Excellent. No, D-Mac, slow down. That BlackBerry, fucking holy moly, it's taken off, eh? Oh my goodness. Excellent, Jim and Liz. Good. Right. And if anything, Jim and Liz, I hope you see what's happening on that Doge, why location is so critical in your reasons for justifying acting in the marketplace. Reason number 2, of course, should be, all right. We'll make this quick just to finish this off. Good that you all got location. Location is always the most important reason. And actually something that's super cool that you guys are all going to love as soon as we get this darn thing polished is look how many cool trade location tools that we're including in the screeners here. So we have like location signals. We've got, you can screen for assets that are setting up the first leg of the bot. We've got the classic reload zone, 61.8 to 78.6. And if we can get this working, oh my goodness, this is going to make our lives very easy. We've got a deep reload zones. Of course, that's 88.6 and like Julian's favorite fib. And really, if you're trading shit coins, this is the awesomest fib. We got the first stop target, calling in his pump chaser zones, 38.2 to 78.6. We got Brian's line in the sand. So what's super cool, and of course, we also have the GAN 50% level. And I love this because actually this is working as we speak. You can load this up right now. And what's super cool, as you can see on the crypto universe, all I do is I just ask for a filtered list of all the assets that are trading at or below their 52-week 50% level. And remember, this is the very first technical reason to justify profit targets that I learned like 30, 40 years ago, the good old 50% rule. And look at all of these assets. This is just crypto, right? And these are long only ideas off of the daily price chart. Look at them all. I mean, all of these assets are at least 20% below their 50% level. And I was going through this yesterday and I was just looking at this symbol after symbol after symbol. And just literally going through and just saying, all right, well, would I be interested in this? Would I be interested in this? This POLS, it jumped out at me. Although, yeah, there it is. It was in both euros and US dollars. And really, this is how easy this model is to trade. You pull up the POS or POLS, I think it was Paulus or whatever. there is that 50% rule. So really, when this market is happy, it should trade back to this 50% level. And lo and behold, look at what we have down here. And so when I pulled this up yesterday, I just basically went through the screener, said, okay, well, is there anything I should be interested in? I just went name after name after name after name. And if I can see that if I could buy this asset at 20 cents, maybe a little expensive, but you can see 51 cents is my price objective. So if I can buy this asset for less than half of what this number is, then that means by definition, if we do get a counter trend rally back up to 50%, then I can technically sell half on a double, right? This is double that purchase price and establish that risk-free trade. It's just TA 101. And so what a big surprise. I think you've heard that Brian kind of likes his 78.6s. And hopefully you can see, well, gee whiz, this looks like nothing more than just a market structure bottom there. Wicks and tails like to be eaten. Well, I've gone and thrown in a bid down below here. And interestingly enough, sort of helping that kind of conversation, the market was a little bit too uppity there maybe a week or two ago. And in fact, what I noticed was, I guess that we never even really talked about this, but this is the large little old lady portfolio. And now little old lady's dealing. Actually, this accounts even more than this. We don't have, this is just the value of the account over on Kraken. But we also have a whole bunch of assets over on the ledger that I haven't been able to move off, like the frac shares and stuff like that. So actually this number is even higher, but basically it's humming along, just doing exactly what it's supposed to do. And then we also have a little junior model. And the reason why I did this was, this is your big, we have invested hundreds of thousands of dollars. This is your little old lady. Hey, Brian, I'll start the account with 10 G's. Don't blow the account up, and I want to be invested. So how are you going to do it, right? 5% on any one single of idea and a whole bunch of cash. In fact, actually, I know that that's not correct. Sushi position is not more than our cash position. So again, I have to work with good old... I don't even know what the heck they've done here. Anyway, it's a work in progress. This will probably actually all get all nice and crisp and clean and look really good into the cycle peak. Anyway, but I fully expect this portfolio to be easily over 100,000 by the end of this cycle. So we'll see how that goes. But anyway, the point here is that I also have a little demonstration Solana portfolio, and this was funded with like $500 from the community. We're probably up around $800-900 right now, so I'm perfectly happy with what's happening here. And a lot of this portfolio is still sitting in that Solana. Interesting. We do have a cash position USDC. I'm not quite sure how that's, but you can see this, and I did this portfolio specifically because I wanted to demonstrate how you can take a very small amount of money and also ramp this up. So, it's just business as usual. Solana names are kind of quiet right now. And if anything, that's kind of good, because I do think that if Solana starts going crazy the way that you saw it going last year, and this number is like ramping up to like 2, 3, 4,000 kind of idea, that's probably the end of our run. And actually, a really good anecdote of that is I have been talking to everybody about, is there any fundamental value to names like this guy? And I don't mean to be rude, but there's no fundamental value to this whatsoever. He is starting to move back up. You saw he had a pretty big rally there. Now a retrace back to 78.6s, so I went and picked some up. I wanted to accumulate a bit more. Why? Because at the end of this crypto move, this stuff will all start going parabolic. And I think that it's just basing now. Notice there was last year, and the way that these things just literally go straight up. And remember, there's no fundamental value to this whatsoever. It's total crap. So, I'm starting to build positions in the crap because we are starting, in my opinion, getting close to sort of the end of this sort of post election rally window. And I think that this little party kind of comes to an end into inauguration. So, a lot of my charts that I've been putting out, there is the inauguration. I kind of think just in the short term, we're going to do some bobbing and weaving. We're now officially into the sort of Christmas season here. If we look at things like the stock market, you can see that Friday options expiry. The market did basically try and bottom. And as I said before, I think a lot of this was entirely due to that options expiry. But you can see stock market on Friday had a pretty precipitous rally here. And this was the dump following the Fed. So there was the Fed dump. As I said, most of the business is usually done on the Thursday. And then the Friday actual options expiry. What a big surprise. They start bringing this market back. Keep in mind, there were probably a lot of people that panic bought put options when that stock market was dumping there following the Fed. So, you can see they finished the day here. I'm sure on Thursday, there were probably people are like, oh, we better go buy a put because this thing's going down. So what do they do on the options expiry? They actually rally it back up and finish it. If we looked at the options open interest and all that kind of fun stuff, my hunch is probably a whole bunch of panic buyers of puts here all got punished on Friday, which is business as usual. Nothing out of the ordinary there. So I think this is sort of kicks off usually the week prior to Christmas. This is what they call the Santa Claus rally. So we had the Fed market, following the election straight up. They needed to relieve a little bit of that overboughtness. And in fact, actually prior to the Fed, things like the Dow actually have been going down day after day after day after day. So I think it was like 9 days in a row or something that the Dow actually went straight down. So if we look at that, that's over here. You can see the Dow had a pretty precipitous drop. In fact, I remember we met our secret options formula club meeting. This is actually a bearish engulfing bar. It's not quite a key reversal, but this is basically a double top. And wow, that sure painted a nasty failure here and found things like the Dow on that actual Fed day and the 1,100 point drop in the market. I think that was the end of this move, not the beginning. And really, I think all they did was they had to come down and just fill in a big gap on the price charts. Not really anything shocking here. And then on the actual options expiry day, how ironic, they actually put in a bullish engulfing bar, probably signaling that this is the end of that selling. So now we should be in that what they call the Santa Claus rally window. And I like the idea that they're probably going to, if you're a fan of that ICT guy, his market structure signals. The fact that we closed this candle here below this low because the market did make a new high here, this basically breaks that bullish structure. So that means that, and I think in the short term, we did nothing more than just good old Ray Burchett 38.2 bounce, which is what you should expect at any given point in time anyway. But the way that I interpret this ICT guy, I don't trade it the way that he does. This is sort of Brian's bastardization. Is I like to throw on the good old reload zones, and I will be hunting like a dog any kind of short setup to go and buy those puts on this gap fill anywhere above Mountain Man here. I think that sets up a very interesting shorting trade location. And I think this basically sets up a selling window, a take profit window heading into that sort of first, I'd probably say 2 or 3 months of 2025, kind of like what we showed you with Mr. Williams. It could be a bit of a challenging environment here. Don't kid yourself. Mind you, I don't know where I put it, but anyway, let's see if I can just quickly show you where was Larry's prognostications here. Short-term cycles, he's looking for some sort of pivot here, I guess near the end of the month, and then back up. But notice that the rally back up just takes us back to highs. I don't know whether cycle-wise that's irrelevant or not. But I noticed a few of his charts. Notice this one into the beginning of 2025, pretty precipitous drop. So don't be surprised if there's some sort of pivot there. January, February, March. When we think about Bitcoin, where is Zio? There's Bitcoin. I like the idea, and of course, you saw Cole there on YouTube. Cole is we call him affectionately on the site Cole Stradamus. He follows and tracks these eclipses very closely for cycle pivots. This actually last cycle eclipse actually I think set up the actual base for this market to rally. Unfortunately, Cole's not too excited about this March eclipse, and I wouldn't be surprised if there's a whole bunch of fear injected into this event. But the irony of it all, like I showed you about a half an hour ago when I was talking about Bitcoin, is I actually think that each of these pullbacks is for us as professionals in this business. This is our buying windows. So I wouldn't be surprised if there is, some back and forth. It's never a straight line. And I like the idea that we're probably going to work our way up into some sort of pivot, especially with crypto and Alan and his influence on Donnie here. I would not be surprised if there's some sort of, in fact, I wouldn't even be surprised if we do have to come up and test these highs, maybe even trade up to through these highs here into that inauguration window event here. Wouldn't surprise me one bit whatsoever. We have not hit the top of the parking garage. We did hit a bullish ABCD, which I told you earlier. And I think a lot of professional traders just trading that ABCD price pattern, I think they took profits. I think rightly so. I think it was an appropriate place to ring the register. That bought objective 108,364. And what a shock. And I don't know if this is by accident. I'm sure it can't be. There must be something screwy about this. But the high there was 108,364. That can't be. I must have done something wrong here. That low there, 49,577. And the low on this study, 577. Call me crazy, but damn, that literally hit it right on the nose and then backed away. I'm a little surprised if that's exactly that number. I can't believe I did that exactly correct. I'd be shocked if that was the exactly correct number and that was the high. But having said that, I do think that there were a number of and keep in mind this is Stamp. I mean, every exchange is slightly different. I do like the idea that we need to trade up to this 200% top of the parking garage. This is just, basic, geometry, market geometry. So that's 109. We also have this 2.618 at 112 and change. This 4669 at 111 and change. I don't see any reason. And interestingly enough, you can see this trend channel is actually pointing higher by the time we actually hit inauguration, I would not be surprised if we sort of waffle, and then take one more push up top here to at least test these highs. And considering we got 2.69 and 4669 right there, I wouldn't be surprised if that's hit. So long and short of it here is I'm actually not even the slightest bit interested in shorting. We're nowhere near where I think that we're going to go into the end of 2025. So last thing in the world I want to do is be selling any Bitcoins in particular. If anything, what I'd like to do is this whole sort of let's keep reloading. Every time Bitcoin has a little bit of a pause here, well, you often have like these little shit coins just completely puke out and come right back down into buying windows. And this is exactly what I'm trying to teach all of you to try and do. Reload, right? That's the whole point of the reload zone. So as it stands, anything that I have on here, a blue dot, is I am actually long. This probably isn't the best screen. I've got one of these screens. I got a whole bunch of these levels already drawn up. And, we just go through all of the names, and what you should see is just basically where I have stink bids. And me, I love my 78.6s, just missed a fill there on that guy the other day. But hopefully you see, I'm just sitting here waiting for all of these assets to work their way back down into reload zones to actually reload. A lot of them haven't. A lot of them are still kind of like, man, sitting in the middle of reload zone, but I'm a cheap ass. I want my bids. In fact, this guy here, I haven't even moved my bid, but I probably should move him up to there. So we'll see how we do over time. This guy here, you can see he did dip down into 78.6. I didn't actually have the order working on here, a little tisk. I've got a ton of this, and I've also got this on the ledger as well, so I don't really need any more. But that would probably be a pretty good example of a stink bid that should have been filled. OMG, interesting on this one. And actually, you know what? I don't really want to go through all these. I'm running out of time here. I only got about 20 minutes left. So anyway, you get the idea. And there were a couple names that I actually did reload on, like this LPT. Really good example, 78.6. And you can see he's actually already starting to bounce. No guarantees that these are the floors, but this is basically a setup that we teach at TRI based on the fact that there is previous market structure that has established a base. And then all you're doing is you're just looking for a 78.6 retracement, or think of this as the market just retraced 80% of whatever this bull move was. And if that dump comes back in against that original market structure, well, I want to just go in there and reload. So that's a pretty good example of how this strategy often works. And now I've basically got a second car on this guy. I had some from here, sold half on a double, reloaded, and just sitting there twiddling my thumbs. And I've been doing a lot of buying. Like I even put a tweet out the other day. The TRI breadth indicator is basically saying that a lot of this bull market move has been completely taken back. And the other day, ironically enough, right around that big dump in the stock market, they were basically just throwing the baby out with the bathwater. And how do we see this on TRI's site? And I'm so pleased now we have basically this tool built, and it seems to be doing exactly what it's supposed to be doing. We look at these breadth indications. You see that both the fast and the slow, and keep in mind these are bullish percentages, and they're basically measuring what the short-term technical picture of the market looks like and what the medium-term technical picture of the market looks like. And when they're both in the oversold camp, and you have the short-term picture of the market starting to perk up, this is telling you that, hey, you know what? You better pay attention. And if we're really, really lucky and we get a situation where both the short term and the medium term, they are just throwing everything out as sell it, get rid of it. It's all garbage. It's crap. It's going to zero. That's when Brian is like, fucking A, man, I got to get in there and start buying. And we just had a signal of that in crypto. So We have on our dashboard, this is the crypto page, so you can see this in a little bit more detail. Here is the crypto breadth, and you can see there was the stock market breadth. Short term got absolutely wiped out, right? But medium term, still a little bit of movement. If they wanted to take this lower, they could. But notice, look at crypto. I mean, everything. They are throwing the baby out with the bathwater. And what's my signal that the baby's being thrown out with the bathwater? Both the short-term histogram is below minus 80 and the medium-term histogram is below minus 80. Remember, this is a bullish percentage. So in essence, everything on a short-term basis is insanely bearish and everything on a medium term is insanely bearish. When I see that signal, that tells me I want to get in there and start buying. And then we'll know that this thing has turned and we're ready to rock and roll and start moving higher in earnest when we actually start seeing like basing price action and we actually start seeing the short-term technical picture start to firm up here. What does that look like? That will be like a W coming in down here and we start actually turning back up. And then as we start climbing the wall of worry again, then all of the medium-term signals will start turning back up. So really nothing shocking here. I stepped in and I bought when they were basically throwing the baby out with the bathwater. I think we're still a little bit early. And keep in mind, this is a very advanced approach to trading. Most new people to trading, you got no business trading like this. This is very advanced. This is basically trying to catch a falling knife, just working orders at levels, but you need to understand the context of what's happening here with this absolute dump. They're just dumping price right back in to the previous bullish structure. So because I've been doing this for 20, 30, 40 bloody years, I am comfortable doing this, but I can guarantee you a lot of new people to trading, you really don't have any business touching this. And I would even suggest that probably it's in your best interest to just let this settle down and start actually Wing out, telling you that yes, indeed, the bull has returned and that demand is overwhelming supply. I think we're probably still a little bit early on that signal. So, if you're super advanced, this is what we call the shark setup at TRI. We have it in a library. And like I showed you off of that public tweet, this is exactly the same image. And I think that this basically defines the market state. What is the market state right now? The market state, in my opinion, is we had a huge, monstrous rally off of the lows. If you knew what you were doing in this space, you were accumulating before the election. I suppose you could have looked at something like this and say, okay, well, there's W's. Let's get in there. Following the election, there's nothing wrong with that. We had a huge rally that, of course, produced doubles, which gives you the opportunity to establish risk-free trades. Yes, the market went further, and had it doubled again, I would have let them have some more. But in this case, that was as far as it went. Then we start drawing our reload zones. Okay, I've already sold half on a double. I have one risk-free trade on now. Now I'm going to go out and start building my second free trade. Now, as I said earlier, do you want to wait for a W to come in here to give you a little bit more confidence that this thing has turned? A lot of you noobs, that's probably good advice for you. But the more veteran people on the site, and keep in mind our OGs in the lounge, they're all like, oh man, the shark's the best. I love it. Fucking A, man. But just understand that this is more advanced trading, just working stink bids at levels. All right. Well, I hope that gives you an idea of what it is I'm seeing in the marketplace. And I'm putting my money where my mouth is. And I have been buying. I don't think that there's a top in the market just yet. I think that if anything, this is the job of the market, climbing the wall of worry. They're all going to now convince you that this is the end of the bull when really I don't even have even the beginnings of a top here. I have technical levels that the market, I think, was working into. I have a catalyst date, and I'd like to see a top develop through this window here over the next 2 or 3 weeks. And then I'll be looking for our dump into that March, April window to actually set up the next big buying opportunity. I am selectively going in and buying assets that have done their retracements, at least 78.6. And I'm more than happy to go in and buy the coins that I sold on these big honking rallies up top to establish second, third, fourth, fifth cars, so that when we go into the big honking rally next fall, I'm fully loaded up. And of course, into that event, I will be taking all profits and liquidating everything into that event window. All right, so that gives you a summary of what I'm seeing in the market. On to the AMA document. Like I said, we got about, well, maybe 10, 15 minutes here. One question I don't quite understand, but nonetheless, we'll get to it in a second. First question, fairly straightforward here. Rob, good question. How do we play real estate in this regard? I would actually look at real estate as nothing more than just another commodity asset. So not a big surprise, into this fear cycle peak. Land values, especially in things like places like China, which, are basically a commodity proxy. So land in a commodity country is going to be the ultimate sort of proxy of that country. Not a big surprise. We had this absolutely insane real estate bubble in China that's slowly, begrudgingly popping. The issue with real estate investing here, of course, is number one, everybody needs a home. So, way back when, and also too, remember, we're going through these massive 80-year money cycles right now, and we're going through the Great Reset part of the money cycle. So this is the absolute worst part of the cycle. And of course, this was a fear cycle apex. So that means that the lack of trust, if you will, anti-hegemony sentiment in the world is highest. I find it hilarious when I hear people talking about the BRICS nations and people actually with a straight face talk about this actually challenging the US hegemony. I mean, no offense, but that's just stupidity. I mean, it's just real stupidity as far as I'm concerned. Anybody in the world who actually takes that concept seriously. I did find it interesting that the talking heads, but some of the people actually that I do trust a little bit more, talking heads in social media, are actually talking about the fact that Brazil is actually in the midst of collapsing as we speak right now. One guy who's, I think actually he's pretty good at understanding how this sort of global money system works. This gentleman, he actually on his latest feeds, he's literally talking about how Brazil is you are literally watching Brazil self-destructing right now as we speak. And of course, I suppose he's talking about, Europe, absolute disaster. There you go. There, I guess that was the latest one. Brazil is collapsing. That was 21 hours ago. And it's spreading. So all of your BRICS nations, are you actually going to go and give Vladdy any of your money and trust him not to blatantly steal it from you? And he will literally look you right in the face and say, I am stealing your money and you will never get it back. And there is nothing you can do about it. Are you actually going to give Winnie the Pooh some money? What are you, on drugs? And now, one of the stalwarts of this BRICS fucking cornerstone, B for BRICS, Now Brazil's in the midst of self-destructing. I mean, it's laughable. This idea that BRICS is actually even conceivable. But anyway, that's what makes a market. And if anything, the only way that we're going to get the US, and I find it hilarious that you go on social media and you actually have people like with a straight face, like literally with a straight face. And this is how, you know, again, just how dumb the market really is sometimes. It just makes you laugh. But people like literally with a straight face, will say the US dollar is crashing. And then you look at the US dollar index and it is literally going straight up. What the hell? What are you talking about? Maybe I'll show you on a weekly chart. That does not look like it's crashing, folks. I'm sorry. That's going up, not down. That's probably not the best chart to show you, but this is literally from last October. That does not look to me like something that's crashing. I mean, yes, we're probably gotten a little bit overdue for a nice technical pullback, but that's going up, not down. I find it hilarious when you listen to these people talking about the U.S. hegemony is over. It's just like, what planet are you on? So, I just stay the hell away from the commodity currencies of the world, okay, people? Just do me a favor. Good old Uncle Brian. Just stay the hell away. If anything, one thing that we all have to be worried about, but I suppose it'll help the Bitcoin story for rallies later on in the year, is you notice that our inflation deflation gauge is ticking up to new highs here. Uh-oh. So inflation is back, no doubt about it. Actually, the one if that Mr. Williams in his video had pointed out, something that could be a problem. I don't think it's yet a problem, but you can definitely see it. It's brewing in the background. This inflation, it's funny when you listen to Larry talk about inflation, he goes, some people say that inflation is a direct function of money supply. Brian, of course, he absolutely believes that without a shadow of a doubt. What did I do with all those M2 charts? Might be this one. So this is the problem. Now you tell me, which direction are those money supply images going? It was interesting. I saw that people were posting charts about liquidity in the marketplace and the price of Bitcoin. I definitely think that in the first quarter there could be a serious correction because I think the Americans, and when Trump gets into power and he sort of kick all the socialists finally out of Washington because he'll basically control the Congress as well as the executive. I think he's going to try as best as he can to actually cause this to turn back down. But you can see the rest of the world. Any slowing down in the stupid communist Chinese idiots? Nope. How about and maybe let's finish off with the commodity countries. You can see these communist idiots down in Australia. Nope, no slowing down with their money printing. Looks like the Europeans, total and utter communist socialist cocksuckers, oligarchs, Klaus from East Germany, all that crap. You can see that they're just about ready to get that inflation ramp back up to new highs. So ironically enough, if you want higher Bitcoin price, you want this M2 money supply in the States to break out to new highs. But I think that what ends up happening here is that I think for the first maybe 6 months or so of Mr. Trump's presidency, I think this M2 money supply situation will calm down. Then, ironically enough, all the new tariffs, all the sort of uncertainty about global, asset flows. I mean, the continued collapse of the Chinese, I mean, we're fucked. Ironically enough, prices of Chinese assets probably won't go down, because they've just got the money printer going, and this son of a bitch is in power until next October. So ironically enough, and then what scares me is this is setting up a crash scenario. And so if anything, this makes perfect sense because it was 2008 when the US housing market finally crashed and had to deal with the bullshit nonsense of George Bush Jr.'s presidency and policies and shit. And I think the exact same thing happens in China. As soon as the market perceives that this Justin guy's done, then this thing will roll over and all hell's going to break loose, but it ain't now. So anyway, point of the matter here is you can see from an inflationary perspective, the money printers are on full steam. And really the ultimate question here, if you want Bitcoin to go to $1 million, then you'd be routing for this M2 money supply to actually explode higher in the States. And what do you think the odds are that we'll see some sort of economic, maybe we'll come up with another sickness. I noticed that chickens are dropping right, left, and center. Do we see some sort of event like that to, oh, well, we have to, I'll sacrifice my life to save capitalism. Oh yeah, right, here we go again. And it just gives the banksters the excuse to ramp the money printers up even more. So anyway, you can see the situation in the world. And I think the whole world, if you want to see this bubble continually inflate, you have to see the M2 money supply in the States actually move to new highs. So, this is the big question right now, just in the short term. While Biden is still there, he is spending money like he's a drunken fucking whore. And, you know how it goes. I mean, anyway, he's got another 2 or 3 weeks to go here. Well, we'll see. This is the big question mark I have in the marketplace. Okay, let's circle back around to those Q&A documents. Sorry about that. And then we'll answer these questions as best as I can. I guess the way that I would look at it, like I said, real estate's a tricky proposition because following the Great Depression, they tried to get the banking industry and sort of speculators in the market out of residential real estate. And unfortunately, following the Great Depression and the Second World War and the Great Reset of the 1940s, to all intents and purposes, the banks were forced to get out of the residential real estate market. And then they literally spent the next 60 years weaseling their way back into the residential real estate business. That led, of course, to 2008, where, in essence, real estate was securitized again. So we're living in a world now where basically real estate is securitized. And under the socialist dream, one should expect an inflating housing price, not because the houses are in great demand, but because the currency is being diluted and the house itself is nothing more than a hard asset priced in these continually devaluing currencies. I don't know whether that helps explain or answer your question. It's interesting. I remember back in the early 2000s, I stood up at a broker meeting and I specifically asked in front of the entire brokerage house, is there some sort of Vancouver real estate index that we could make speculative bets on? And everybody in the entire office, in the trading pit, all the brokers were all brought together to try and say that one firm was bought out by another, so it's a meet and greet and all that crap. Right in front of every single person in the firm, I asked that question, and everybody all burst into laughter in unison. Clearly, there is no proxy for us to be able to speculate on the Canadian real estate market, which really pissed me off. Because why? The whole fucking market is completely controlled. It's completely manipulated. And they don't want guys like me going in there and buying put options, because when the damn bubble bursts, those put options are going to be worth a hell of a lot. So in a weird sort of way, like the way that you had to play it down in the States was you had to buy credit default swaps. It wasn't like you could actually go buy a put option on a real estate index. You had to go and make a bet with, and keep in mind, it's not open to the public. You had to have hundreds of millions of dollars, watch The Great Short or The Big Short or whatever the other movie was, right? You all know the story. But the only way that you could play it was you had to bet on the public defaulting on these derivative products, the credit default swaps, which ironically enough actually ended up becoming a bet on the brokerage houses actually defaulting, right? And Lehman defaulted, AIG defaulted, Bear Stearns defaulted, and the whole damn house of cards collapsed. So the short answer to you, unfortunately, is no. There isn't real estate indexes that you can actually place bets on in my country. I'm sure there might be somewhere down in the States now, but the powers that be don't really want the public speculating on up or down real estate markets. I've personally found in my experience, and the way that they spin it for the public, of course, is, remember, real estate in itself is actually an entirely crooked proposition. And there was a gentleman that actually, I put a video out that he's actually suing major states, I think the state of Texas right now, for artificially manipulating the valuations of residential real estate for the purposes of continuously and endlessly raising property assessments for tax purposes. So you have to understand that government is actually in on this fucking crooked fix, because as long as they can keep justifying the bubble of real estate prices rising, then that means by definition that they're getting pay raises consistently. So in a weird sort of way, governments do not ever want to see this real estate bubble pop. Now, you tell me, is that good economics? The answer is clearly no. You tell me, is this sustainable over time? At some point, this fucking thing is going to tip over and all hell's going to break loose. And my hunch is, I mean, you hear all these people talking about 2028. I mean, that's when the asteroid's supposed to come and slam into Earth, right? Apophis or whatever. So, all the astrological people talk to Cole. I think Cole's expecting the fucking end of the world here at the end of this decade. But it wouldn't surprise me one bit that it's that 2028 through 2032 cycle trough where that bubble finally is popped. It's stunning how big this corruption is, because everybody is in on this scam. And the one thing that they absolutely cannot have is for the real estate prices to actually fall, because then all of that government revenue that's been justified over the past 20, 30, 40 years, I mean, this has just been a one-way train wreck, that all disappears. And these governments could be in really, really big trouble if that real estate bubble is ever really popped in earnest. And that's what I think is actually driving this. So this is not an easy question to answer whatsoever. It's probably one of the most difficult questions that you can answer. So what I would just simply say is, if you're looking for real estate on the cheap, I think the absolute best times to be a purchaser of real estate, ironically enough, is when interest rates are really high. And that short-term interest rate is cranking up because the Fed wants to desperately slow the economy down, wants to try and get in front of that inflation problem. But as we all know, that was about 6 months ago. The Fed has, and you see all around the world, the inflation problem has been somewhat dealt with, although I don't think it's gone away at all. And now it's really a question, especially for like these commodity countries like China, Australia, Russia, and really I might even argue China, because the whole fucking thing was a complete fraud. In fact, I even watched another video from my fun little Chinese lady that I love so much. The lay report. Everybody gets laid when you watch her video. About how absolutely brutally corrupt the CCP has been about actually talking about their populations. And she showed one video which was shocking, where like literally CCP officials now are coming in and saying you must have kids, and if you don't, your social credit score is going to go right out the window. I tell you, there is a really, really good example. So now, quite literally, people are being, they're literally being, okay, ready, Google, here it comes, demonetized. The CCP is literally holding guns to the young men of China's head and forcing them to fuck and inseminate at gunpoint. That is literally what is happening in CCP China right now. Can you believe that? They are literally being forced to fuck at gunpoint. You can't write better fiction than reality. You literally can't write it. They're saying things like kindergartens are completely empty now. There are no children there. That's incredible. Go watch her video. I should probably retweet it, because that we should save that. That is a perfect testament about how fucked Winnie the Pooh is. All right. So, not an easy question to answer whatsoever. Very, very difficult question to answer. We can talk about a little bit more about this tomorrow. And David, I'm sorry, buddy. You're just going to have to wait till tomorrow. I'm sure, his question here is, I don't think you answered my question. You had mentioned answering them on Monday, but I watched Monday episode and I don't remember you answering any of the Q&A document questions. So here's my question again, in case you missed it. Do you think there's any validity to the theory that the bull market will top out in March or April of 25 instead of next fall? Okay, there's your question. Nice and simple. No, I don't. Everybody's entitled to an opinion. That's my opinion. So I answered your question. There's not really much else I can really speak to it. No, I don't. Are there any specific signs you will be looking for to determine if the market is topping out so you can sell your remaining position before the market reverses? Yeah, really simple. Everybody and their brother is basically saying you must be long. When you go on social media, do you hear everybody and their brother is saying you must be long crypto? And if you aren't long, you're an idiot. No, I don't hear anybody talking like that at all. In fact, I think that we're in the climbing the wall of worry phase, right? I mean, we look at our crypto, that does not look to me like a market where everybody and their brother is long. If anything, this looks to me like this is all they did was back it up into another buying window. So that's the answer. Pretty straightforward. You can come on here, David, if you'd like, and rebut this, and I'll circle back around tomorrow, because I think I would like to give this question about real estate a little bit more thought, maybe see if I can come up with some data points for you here, Rob. So, David, I apologize. I mean, that's the answer. I answered your question directly, and I think I just got to leave it at that. All right, excellent Glass Insight. So yeah, as you can tell, I want to wind this up. I should have wound this up about 15 minutes ago. It took a little bit of time to talk a little bit about these questions. Perfectly good. There's nothing wrong with you asking questions. Hopefully I wasn't sort of controversial with my response. I'm more than happy to circle back around and say exactly the same thing again tomorrow, David. So maybe come on here if you would and just type in, okay, Brian, I heard you. But still riddle me this, Batman, if you want, whatever. And then Rob, I don't know whether I really helped answer your question here. Very, very good question. I wouldn't mind in tomorrow's daily brief to circle back around and we'll talk a little bit more about this. It's This is a very difficult question. Don't get me wrong. It's a difficult question. Okay, I think we're going to leave it at that. So have yourself a great rest of your day. Wish us luck on the road. Glass Insights gave me a karmic wish for Lily. I see over there, MM's given me some good karmic wishes. All of you, if you could, it helps out a lot. So thank you very much for participating today, whatever participation I offered. Just basically talk, talk, talk. I think all of you would do yourselves a favor. I think this is a very, very good backdrop to sort of understand what 2025 is going to look like by Larry there. I shared it in the video. I'll also share it in the lounge here. I think I probably already did. So we'll put that in there as well. And I think somebody else already shared. Oh yeah, I mean the great part about it is you can see our regulars. They're just going about doing what they do. And oh, look at that! Here comes a W down at the bottom end of rating ranges. So I mean, not a big surprise. This guy's gonna be so fucking rich at the end of all this. So all right. I think we'll leave it at that. We'll see everybody tomorrow on the site for site vid. You know, if you need help learning how to manage yourself and manage a small business of trading, well, keep in mind we got a new school term coming up here shortly. So maybe consider joining us for the education program. Always a challenge whether these sites are going to load. Let's see what happens here. There you are. So new school term starts in January. If you haven't signed up, get your butt in school and we'll get you schooled up because I tell you, there's one hell of a bull market coming here. So enjoy the ride, strap in, PMA for the win, slow and steady wins the race. Remember, don't take no wooden nickels. Remember what your number one job is. All the best. Bye for now. Bye-bye.